YouTube, what up, family? Um, I know it's been a while, but I'm back, and God willing, I'm here to stay. I really want to start posting as consistently as possible, especially for this new year. It's on my bucket list. It's one of the big goals that I have is to be consistent posting, and if the goal really is to post right now I'm saying once a week, but life could get hectic sometimes. So if I don't end up not posting once a week, I'm gonna try to go every other week, but I'm gonna try not to go more than 2 weeks without uploading the video. I really want these videos to be as raw as possible, like not no serious like editing or nothing like that. I'll save that for later on in my journey, but right now I just want to just really get to the point and try to add as much value as possible. So, like I said, I want to be posting weekly or so trade breakdowns. I want to break down all my trades that I'm going to be taking, or most of them. And it's really a couple of reasons why I want to do this. For one, I think there's value in it for myself. Obviously, it's for journaling purposes, for documenting my journey purposes. I want to be able to look back at these videos and learn from them, and just be able to document what's going on in my life, and look back at these videos and 10 years from now or 5 years from now and see how much progress I've made. And I think it's also a way for me to just stay disciplined in making sure that I'm following my rules when it comes to trading. I think sometimes when I fuck up, like I sometimes get down on myself, and it refrains me from journaling. But if I'm holding myself accountable to posting videos and I'm putting it out there for everybody to see, that'll hold me accountable to making sure I'm not breaking my rules 100% of the time. So that's a big deal. And then also, I think another reason why I'm doing this is because I really want you guys to see how I'm trading, and I think that my strategy is. I think personally, I have the best strategy out there. To be honest, it's something that's taken me about, I want to say like 6 or 7 years to perfect. And it's still maybe a little bit of tweaking that can be done, but I am a profitable trader. So I do think that there's a lot of gems that you guys can pick up. And I really want to share my journey, especially as I mentioned, I feel like my breakthrough to the point where I can do this 100% full time is coming. So I just want to put that out there so you guys can soak up as much free game as possible. All about giving back, all about sharing whatever knowledge I have. So definitely soak up as much as you can. And then as far as my trading journey goes today, I would say one thing that I'm struggling with, or a barrier I'm trying to break through. And I know, like, just speaking with other traders and hearing other traders' testimonies, I know one thing that I'm working on within myself is like imposter syndrome, especially because, long story short, I was kind of put in a situation where I had to rely on trading full time. And it was kind of unexpected for me. Like trading, like, was always there. Has been a part of my life for the past 6 7 years, but I've always had more income. And I think that, well, I know that because trading is more of a psychological battle than it is technical. Like, in my opinion, if you ask me, trading is 20% technicals and 80% psychology. Who you are and the patterns and your characteristics are always going to come out within the charts. If you're greedy, it's going to come out. If you're impatient, it's going to come out. If you want it too bad to the point where you're overdoing things, that's going to come out. Literally, who you are, how you trade is a representation of who you are. And so for me, like, knowing that training is more of a psychological battle. Like I said, I've been struggling with imposter syndrome And I think that because I put more pressure on myself to do it full time, that when I'm in a trade, I start to second guess myself, and that's not good at all. Like I could like that. Like when you're in a trade, it's important. Like sometimes it may be good to cut a trade early if you're seeing certain things based off of the technicals that tell you to get out. But sometimes you may be overthinking it. Like, oh shit, like I let me close out because it looks like if I'm in buys, it looks like it just formed a double top and it looks like it's about to reverse or whatever the case. But like, and you start to psych yourself out and you start to find like different reasons for you to exit the trade when in reality just hold that shit. Like you did your due diligence, you did your analysis, and based off of all of the confluence that you have that made you get into that trade in the first place, you need to hold it. Like just simple as that. Like trust your strategy. You know that you're profitable in back testing. You've been profitable. So why are you allowing yourself to doubt your move, that like doubt your analysis? Like stick it through. And I think that's literally just because I was in a situation that like forced me to kind of be that way. Like it wasn't necessarily a choice for me. And maybe I'll tell the story some like further down the line. I don't really want to get into it at this point, but yeah. So I feel like that's kind of what I've been battling with. And I think the first step to growing and taking that next step with anything in life is to recognize what the problem is. And I think now that I know, and I've known what the problem is for a while, like it's up to me to just like lock the fuck in, not let that shit hinder me from my growth. That's the biggest thing. And so I'm looking forward to, just like I said, just document my journey and showing you guys my success within trading and documenting all my trades on a weekly basis, and slowly getting to open up to y'all so y'all could get some game as well. And without further ado, let's get right into the trade breakdown. Y'all, I'm so pissed, bro. Like I literally sat here for damn near an hour. I dropped hella game. And then after I finished recording, I realized that I wasn't sharing my screen. So now here's my second attempt at re-recording this video, and hopefully I could duplicate all the things that I was saying as effective as I was, because I'm telling y'all, the video was fire. Like I was listening back to it. I dropped so many jewels in the video. But yeah, let's get right into it. Let me make sure I do this right this time. Y'all should be able to see me. Okay, so the first trade that I took for the week was on USD CHF. Usually when I start off in my approach to the markets, I always start off on the daily time frame, just so I can understand from a daily perspective what the bigger picture looks like. So based off of this daily time frame, it looks like we are in a downtrend. Just looking at structure, you can see this huge movement down. Like we're clearly in a downtrend overall, clear as day. And then also on the daily time frame, I like to mark off my daily levels of support and resistance with these horizontal rays, just so that way when I'm on those lower time frames, I could know where I'm at within structure. So then hopping down to the 4-hour time frame, this is when you can really start to see structure a little bit more in depth. And so just drawing structure out, we can see that we stopped this bullish trend at this point right here, because price was heading down, and then price broke above this high, maybe confirming that we wanted to continue up, but then price came down again, and we can see that it continued on with this bearish structure. So this was the break of structure right here. We have lower low, lower high, lower low. And so based off of this 4-hour time frame, the higher time frame, we are in bearish structure. But it's important to understand that within the higher time frame structure, lower time frame structure is also being formed, right? And that's a concept that not a lot of traders touch on. Is a few traders out there that I feel like teach structure the right way. But I think that honing in on my way of viewing structure is really what took me to the next level. So jumping back into it. So we have lower low, lower high, lower low. And so in order to create that lower high on this higher time frame, we need the bullish structure to be formed on the lower time frame. And so usually when I'm on a 4-hour time frame as well, I usually mark off my levels, my 4-hour levels of support and resistance as well, so I can know where the market is going to react from. And so this was a level right here. This was a level. This was a level. This was a level. These levels aren't really important for right now. So those were my main levels. And so going into this day, mind you, this higher time frame is bearish, but the lower time frame structure is being formed on a lower time frame in order to make up that higher time frame. So as soon as we were above this level, and I saw that we did not react from this level, like, because price could have easily came to this level and then started trading back down. It did not, and we broke above this level. So hopping down to my 1-hour time frame, this is when you can start to see the 1-hour structure, and you can start to see this the uptrend, the minor structure uptrend being formed in order to create that higher time frame structure. And so, mind you, I'm a day trader. Like I would describe myself as an intra swing trader. So I like to enter like a day trader, but I hold the trade as long as I need to in order to achieve my desired outcome. So that kind of, I'm a hybrid of intraday trader and a swing trader. So with me being an intraday trader, I don't mind taking counter trend trades, because swing trades, if you have that approach of swing trading all the time, you'll take less trades in a week, and just psychologically, like, and everybody is different. So my approach doesn't have to be your approach, but for me, that mix and that hybrid is what allows me psychologically to be successful. Anyways, let's dive back into it. So based off of this 1-hour time frame structure, we can see here price was on this downtrend, creating lower lows and lower highs. This was the last lower high point before price ended up breaking structure, creating a higher high, higher low, higher high, higher low, higher high, higher low, higher high. Let me put another. Higher high. And then I know that we're trading so far I know that we are trading above this higher time frame support and resistance. Price is forming bullish trend structure. Also, price is reacting off of this counter trend line. And this is how you draw trend lines, is you want it to have 2 confirmed touches and then drag it out into the future. So this was 1 confirmed touch right here. This was a second confirmed touch, and then you drag it out into the future. So this was the 3rd confirmed touch right here. But then price broke above this level, came down to retest this counter trend line, and continued up, making this counter trend line valid to be a counter trend line. And looking at structure as well, more in depth, I'm going to hop down to the 30-minute time frame. Higher high, higher low, higher high, higher low. And so everybody knows the saying, when like you are investing, you want to buy low and sell high. So I'm always looking to buy at higher low points. No matter what, I'm always trying to buy at higher low points because that's the most discounted price, obviously. And I have all the confluence in the world in order to take this trade right here. And price is also another form of confluence is we're reacting off of this trend line that I drew based off of the 15-minute time frame. Usually when I'm entering, I usually like to enter on a 5 minute, 10 minute, 15 minute, or 30 minute time frame. And so for this trade, at this point, I had my indication above this level, indicating to me that we are confirmed bullish. And so now we have a correction. And so I'm looking for a continuation. And if I could continue to trade above this level, I know I'm green for buys. At the same time, though, remember that on the higher time frame, we are in bearish structure. So if I take buys here, it's important for me to keep in the back of my mind, like, okay, like this could be short-lived, because if the market is truly bearish, the higher time frame is always going to hold more weight than a lower time frame. So if we are truly bearish on the higher time frame, we could go bearish at any point in time. The market can do whatever the fuck it want to do. So it's important for me when I'm going into this trade to be extremely disciplined and to a T, so that way I'm being as conservative as I can be, because I'm already taking a riskier trade going against the higher time frame. And so it was important for me, like as I was managing this trade, to put my take profit prior to me reaching this level, this higher time frame level you see here, especially because if price had gotten to this point, we would damn near be at 100% retracement from it creating this last lower high point. So my take profit was just at a 1-to-1. I'm always putting in my take profit as at either a 1-to-1 or 1-to-1.5, depending on the situation. But for me to be as safe as possible, it was at a 1-to-1, which was also in confluence with this high as well. And I ended up entering based off of this 15-minute bullish and engulfing candle. And price, like, it definitely could have, I definitely could have maybe tried to wait a little bit longer to see a stronger candle than this. But to me, it wasn't bad. I entered this trade at about 7:15 in the a.m. During right before New York session. New York session is when the volume would kick in. So me taking a trade right now wasn't like bad at all right before session. And then on top of that, it looked like we created a little double bottom here, which was another form of confluence. Like I said, like and if you know, like, and if you know indication correction, continuation, anything above this level would be good for buys. On top of the fact that I like to say price is fractal. So whatever happens on the higher time frame is also going to happen on the lower time frames as well. So there's structure within structure within structure within structure. Like it's so detailed. And so based off of this 5-minute time frame, if we look at structure, we can see this, like, we know that this was heading down to create a lower low, then a lower high. This is also based off the higher time frame. And I can draw it out if y'all need me to, so that when we go further down, you can see, but higher high, higher low, higher high, higher low, higher high. And so if we go down to the 5-minute time frame, we just did that, I think, on the 15 or the 30, same shit. But if we go down to the 5-minute time frame, we can see this minor downtrend structure. We have higher high, higher low, higher high, and then price started to go on this downtrend, lower low, lower high, lower low. And then price broke above this high right here, creating a higher high, higher low, higher high, and then like a potential higher low point right here, and respecting this level of support and resistance here on the 5-minute time frame. So I always enter on the 5-minute, 10-minute, 15-minute, or 30-minute. Seeing this candle, I was pretty confident in taking buys. I put my stop loss right here. Now, the absolute correct way to do it would be to put your stop loss below this low right here, because that's when you'll be confirmed wrong based off of a little bit of the higher time frame, so the 1 hour, the 30-minute time frame. But because I had so much confluence in this trade, I was confident, and I decided to just pop it right there. And then let me let this trade play out. Ended up hitting TP1, and then after that, price went on to stop me out. And I can't be mad at this trade at all, because I mean, I knew overall it was counter trend. And I did everything I was supposed to do, because price could have very well broke this level and continued on and hit all TPs. You never know what's going to happen. All you could do is react to whatever the market is showing you. And so for the day, this was the best trade that I could have possibly taken, and I would take this trade 10 times out of 10. This was a great setup for me, other than the fact that we were counter trend. And I don't know if I said this already, because as I mentioned, the video cut had I fucked up the recording the first time. But overall, this week, I would say in trading, it was a good week from a psychological and mental standpoint. Not from not monetarily, but this was still a W week for me, because I stuck to all my rules. I did what I could, and I couldn't have done anything better. And that's all you can ask for within trading, like, is for you to follow your rules to a T, and over time your equity curve will be profitable. So that was this trade. And then for the week, I ended up taking another trade here on AU, and this trade pissed me off, bro. Like, it really pissed me off. Let me fast forward a little bit. A little bit too far, but it pissed me off, and I'll get into it. But as mentioned, I always start off on the daily time frame, so we can see on this daily time frame that we're obviously bullish. Like, we're bullish as fuck. If we look at structure, this was where we had this is where we had that break of structure from this little downtrend right here. So higher high, higher low, higher high, higher low, higher, starting to create a higher high. And I always mark off my daily levels of support and resistance. So now let me hop down to the 4-hour time frame, so that way you can see structure a little bit more in depth. This time frame is also extremely bullish. Higher high, higher low, higher high, higher low, and then forming a higher high point. I would say the only downside to like the market conditions going into this day where I ended up taking my trade was the fact that we had no data to the left on this 4-hour time frame. Obviously, if we go to like the daily or weekly, we can find something over here. But based off of this 4-hour time frame, there was really nothing here for me to really go off of. Now, it would be different if price maybe right here, instead of stopping right there, it came up like right here and then went down, so that way I could see, okay, there's a level of support and resistance for me to use as a structure point or a potential take profit point, but that was not there. So I would say that was the only downside, was that I didn't have a stopping point, which could be either good or bad. Because if the market is in no man's land, it could reverse at any point in time. And so before I hop down, I also marked off my 4-hour levels of support and resistance. As you guys can see with my zones here, it's a little bit light, but you guys can see with my zones there. And then, okay, well, before I hop down as well, it's important to note that we know that we're bullish and we're also above this 4 hour level of support and resistance. So, and we know that we are on this continuation path in order for this 4 hour structure to create that higher high point. So with that being said, now I'm going to hop down. So you can start to see structure a little bit more in depth based off of this 1 hour time frame. So we can see where price what price was doing. So based off the higher time frame, we created a higher high. Then on the lower time frame, we can see this minor structure being formed here to create this higher low point on the higher time frame. But let's mark off this structure right here. So we have higher high, higher high, and then price broke structure right here to in order for it to come down to form that higher low point based off of the higher time frame structure. So lower low, lower high, lower low, lower high, lower low. And in order to see this a little bit more in depth, you can hop down to the 30-minute time frame. I kind of use the 30-minute and the 1 hour time frames interchangeably. But this was the last lower high point before price decided it wanted to continue on to create that higher high on the 4 hour time frame. So higher high, higher low, higher high, higher low, higher high. And then after this higher high point, obviously we want to always buy at a higher low point because it is the most discounted price. And the reason why I decided to buy here, I'll go over all of the confluences really quick. I've already mentioned that we're trading above this 4 hour level of support and resistance. We are confirmed bullish on all time frames. So unlike the last trade where we weren't bullish or we weren't we weren't bullish on all time frames. Now we know we're trading with the trend, and we have other levels of confluence in order for me to take this trade. So we're at above this level. Price is bullish, forming structure. If we hop down to my 15-minute time frame, we can see that we created a counter trend line, 0.1, 0.2, drag it into the future. Price is strongly rejected off of that. And then another layer to it is if we go down to the 5-minute time frame to get a little bit more into the nitty gritty of what's really going on in the market, and we look at this 5-minute structure, we can see on this way down, it formed structure. It formed a downtrend structure. So lower low, lower high, lower low. We broke structure right here. This is where we broke structure. Creating that higher high point, higher low point. And so at this point, I'm looking at price action in order for me to get in on the market, because I know that on literally all time frames were confirmed bullish. So I ended up entering on this 15-minute bullish variation, and then I put my stop loss below this low right here. And before I let the trade play out, you guys are probably wondering what are all of these other lines on my charts, but it's called Fibonacci. It essentially just measures the retracements that you see within the market. So we created a higher high, and after we created a higher high, the market has to retrace. In order for any trend to be healthy, it has to retrace a certain amount. And so the Fibonacci tool, it just measures that retracement. And so a lot of people like to say between the 50 and the 61.8% is the golden zone. And it can or cannot be for whoever you are. The main reason I use Fibonacci is really for the projection. So the negative 27 and the 61.8%, because they usually say if price trades from the 61.8% and the 78.6% down. That price is projected to shoot up to the negative 61.8%. And if it's from the 50% and up, or below, I should say, number wise, that it's going to only go to the negative 27%. And so that's pretty much what I use the Fibonacci tool for. It's not super important. It really depends on the strategy and who you'd ask. But like I said, I only use it as far as projection, really. And so with that being said, let me just let the trade play out for you. I entered on the 15-minute time frame, that bullish variation pattern. Let price play out. Boom, hit my 101. So at this point, because it hit my 101, and the reason why I decided to go make this my 101 is because, one, we were at this potential level of resistance. And then on top of that, I, based off of where my stop loss was and me risking 11 pips here, another 11 pips just made sense for me to put my first TP here. And I'm not gonna lie to y'all, this trade really pissed me the fuck off, bro. Cause look at it, all TP smashed. Like, I would have gotten a 1-3 here. And the reason why I say this trade pissed me off is because, as you can see, price played out. But because price hit my 1-1, like, I have a rule and I'm super strict about it. Every time I hit a 1-1, to move my stop loss to break even. And so my stop loss, instead of being down here, was at break even. Price came down because news dropped. Mind you, I was in this trade since 8:30 in the morning. So literally 8:30 in the morning. At fucking 7:30 p.m., news drops on in Australia, and it spikes down, takes me out at break even, created this big ass wick, and then flies up to TP. 1-3 risk to reward. A bag missed out on because of break even. But as a trader, these things happen, and there's always another trade. Like, it's especially because it's the beginning of the year, the markets are always open. I can always find another good setup, and I can't harp on it too much. But yeah, that was this trade. As you guys can see, price played out beautifully. And last thing I'll touch on is, like, you see how price literally hit my negative 61.8 here projection level from this fib perfectly, and then after that price went down. Like, that's the power, or that's the beauty of using the Fibonacci tool, in my opinion, because I could project where price is going to go, and it's not always 100% accurate, but it's crazy how price literally reacted off of this level, and like, it gave me what I wanted. And I think that's this green line right here. And then I think this as well. I had another fib on my higher time frame from this low to this high, measuring this retracement. It retraced to the 38.2, and so this was the negative 27% on the higher time frame. So literally, my lower time frame fib and my higher time frame fib was in confluence for price to get to that level. And so like, it's just crazy how powerful the tool is. But that's the last thing I wanted to touch on. But this is why I say this week was more of this week was a win for me from a psychological and mental standpoint, because I did everything I could do. Like, there's nothing I could have done better in this past week. Like, I did what I had to do. I followed my rules to a T. It's just sometimes, like, the markets can do whatever it wants. But because I was super strict and disciplined with my rules and with myself, it saved me from losing money. Like, I was able to break even on this trade and on the last, just simply by following my rules. Well, on this trade, I ended up losing a very small amount only because of spread while I was at break even. Um, and I don't know why I'm blanking right now, but my broker ended up not, because it was news that took me out. The broker ended up not being able to take me out fast enough, and the spreads were so wide that it probably took me out a little bit late, but it was pretty much break even, pretty much $0 based off of how much I was risking. So that was that. And then, so those were the only two trades that I actively took. And then I wanted to touch on this trade briefly, only because it's a trade that I could have taken, and I literally watched it played out. And the only reason I didn't was because I had one small rule that was kind of broken. But let me break it down really quick. I don't want to make this video all too long, so I'm gonna go fast. Daily time frame, you guys know I mark off my levels. 4-hour time frame, I can see structure, also mark off a couple of zones. You can see structures clearly in a downtrend. We created this lower low point, and after a lower low point, we know after a lower low point, we know a lower high point has to be created. But this was based off of this structure. This was the last lower high point that we have, because lower low, lower high, lower low, lower high, and the price from here travel all the way down here in order to create a lower low point. So a higher low point could have been made right here. It could have been made right here. It could have been made right here, or it could retrace all the way to this 100%, in which it did. And now price could continue down and still be bearish. But as mentioned, this trade is more so similar to the first trade, in which it was counter trend. And so me knowing that we were bearish on the higher time frame, on the lower time frames. Well, before I have down to the lower time frames, another confluence I had to take this trade was this counter trend line. So we have 0.1, 0.2, and then I ended up taking buys. Well, I wanted to take buys, at least at minimum up to this level, because there could be potential sales that come into play right here, and I could have hopped in for sales. After that, I saw what I wanted to see on the lower time frames, but I wanted to take price up because I know we had to create that lower high point based off of the higher time frame structure. So looking at structure here, price was moving bullish. As you can see, we broke above these high. We kept breaking highs repeatedly, better easily shown on the 5-minute time frame. But we broke a higher high and then higher low, and then I was going to enter. Well, I would have entered right here based off of the 10-minute time frame after this bullish variation pattern, and this was at 310. And I literally, it was painful because I literally watched this trade play out in front of me, and the only reason I didn't take it was because I have this strict rule within my trading plan to not take any trades if it breaks a high or breaks a low. And so in this case, this low was equivalent to this low, and so it didn't break it on trading view. But if you go to my broker, this low was slightly lower than this low. And so because of that, I ended up not taking it simply just off the broker alone. And I always trade based off of trading view, but with this being the first week back in the markets after the new year, I was just like, let me just sit on my hands, and I just wasn't feeling it. But I was very much contemplating on pulling this trigger, especially because there's other confluence as well, like this counter trend line that I had at this level, and us also respecting this structure point on the 5-minute or 10-minute. And so as you can see, I would have went break even somewhere around right here at a 101, and before we got to this first level, and then I would have targeted I always target a 2.5, and then let it ride on out from there. So price, who knows how much money I could have made on this trade. Well, actually I do know if I just did the math, but like I literally could have been holding this for like a 1 to 5 had I just pulled the trigger. But I think it's important to not harp on it too much because of the fact that like I followed my rules. Like that's all I could do. And if I felt iffy, anytime you feel iffy, you don't want to enter the trade, because just like it played out in this case, the next time it probably won't play out. So the more you could be disciplined, the better off you'll be. And so overall, this was a solid week for me. I'm proud of myself, and like I said, I do want to get more so into just documenting my trading journey on a weekly basis, just so that way you guys could pick up some game. But I hope this video was helpful, and I look forward to seeing you guys on the next one. Peace.